In 2026, the world's quietest millionaires are completely abandoning the stock market. They aren't buying tech companies, they aren't trading options. Instead, they are quietly buying up the most boring, unglamorous physical assets in your hometown. Assets that most people pass by every single day without noticing. While everyday investors watch their digital portfolios fluctuate, these asset owners are collecting predictable cash flow month after month. They found a hidden loophole in the modern economy that protects their wealth from inflation and market crashes. Here is a look inside the underground market of boring assets, and exactly how you can buy your first one this year. Meet two people, same city, same starting point. Derek trades stocks every morning before work. Sarah owns a laundromat nobody notices. Derek checks his portfolio 40 times a day. Sarah checks her machines once a week. By 2026, one of them is trapped. The other one is quietly, boringly free. Let's go back to 2020. Derek was 31, working in tech sales. He loved watching charts move in real time. Green candles gave him a rush. Red candles kept him up at night. He owned shares in exciting companies everyone knew: electric cars, streaming platforms, artificial intelligence startups. He talked about his portfolio at every dinner party. His coworkers asked him for stock tips constantly. For a while, he felt like the smartest guy in the room. Sarah was 32, working as a school administrator. She had no interest in charts at all. She drove past an old laundromat every day. It looked tired, faded sign, cracked parking lot. Nobody else wanted it. That was the point. She bought it for $90,000. Her friends thought she'd lost her mind. Laundromats are dying, they told her. She didn't argue. She just kept the machines running. She spent her weekends learning how the coin boxes worked. She fixed a broken dryer herself, using online tutorials. It wasn't glamorous. It wasn't a story worth telling at parties. But here is what everyone missed. Laundromats don't need to be exciting to work. They need people with dirty clothes. That's it. Rain or shine, recession or boom, clothes get dirty. Sarah wasn't betting on hype. She was betting on laundry. Derek was betting on headlines, and headlines change fast. Let's pause here and explain something important. Most people think investing means picking the right company. That's only one type of investing. There's another kind. It's called owning cash-flowing assets instead of speculative ones. A speculative asset needs its price to rise for you to win. A cash-flowing asset pays you whether the price moves or not. Sarah's laundromat wasn't going to double overnight. But it didn't need to. It just needed to run. Then, everything changed. 2022 arrived, and inflation hit hard. Derek watched his tech stocks crumble in months. Some fell 60%. Some never recovered. He held on, hoping for a bounce back. The bounce back took years he didn't have. Every night, he opened his portfolio app before bed. Every morning, it was the first thing he checked. His girlfriend noticed he'd gotten quieter at dinner. He wasn't really there anymore, even when he was. Sarah raised her wash prices by 50 cents. Nobody complained. Nobody had another option nearby. Her income went up while Derek's went down. That's the hidden mechanic nobody explains clearly. Physical assets can raise prices with inflation. Stock prices don't ask your permission first. They crash whenever fear spreads through the market. Sarah's machines didn't care about fear at all. They just kept spinning, quarter after quarter. She didn't read financial news. She didn't need to. Her business model didn't depend on anyone's mood. Most people think Derek was still ahead. They are dead wrong. By 2023, Derek's portfolio was down 40%. He refreshed his app constantly, hoping for green. He started avoiding conversations about money entirely. That's the part nobody posts about online. The silence, the shame, the sleepless nights. He told people his investments were long-term plays. That phrase became a shield he hid behind. Nobody knew how bad it had actually gotten. Sarah, meanwhile, used her laundromat cash flow to buy something even more unglamorous. A small self-storage facility on the edge of town. Rows of metal units. Nothing pretty about it. But people always need somewhere to put their stuff. Divorces, moves, downsizing, chaos. Storage units profit from all of it. She didn't need the economy to grow. She just needed life to keep happening to people. Life, it turns out, never really stops happening. Let's slow down and explain this properly. These are called cash-flowing physical assets. Boring businesses that produce steady, predictable income. Laundromats, storage units, car washes, vending machines. Nobody brags about owning these at parties. Nobody makes a documentary about a car wash. But every single one collects money, quietly, every day. Sarah wasn't chasing growth. She was collecting cash flow. That's a completely different game than Derek was playing. Derek needed a stock price to rise. Sarah needed people to keep living their lives. One of those things is far more reliable. Here's the loophole almost nobody talks about. Physical assets don't show up on a stock ticker. There's no app refreshing their value every second. No panic selling at 3 a.m. Their value moves slowly, and mostly upward. Sarah slept fine through every market crash. She didn't even know they were happening, most weeks. Her phone had no stock apps installed at all. She simply had no reason to open one. Let's talk about the exact math behind that laundromat. Sarah's 24 machines brought in roughly $4,000 a month. Her costs, water, electricity, rent, ran close to $2,000. That left her with $2,000 in monthly profit. Not life-changing money, not yet, but steady and growing. She reinvested almost every dollar for the first 2 years. New machines, a fresh coat of paint, better lighting. Small upgrades that made the space feel less abandoned. Regulars started coming back more often after that. Word spread slowly, the way boring businesses tend to grow. Derek, meanwhile, was reading a different kind of math. Percentage gains, candlestick patterns, support and resistance lines. He could recite technical terms most people had never heard. None of that vocabulary made his account grow any faster. Knowledge about the market isn't the same as income from it. Sarah didn't know a single technical trading term. She knew her water bill, her rent, and her margins. That was the only vocabulary her business actually required. By 2024, Sarah added a vending machine route. 15 machines, scattered across office buildings and gyms. Almost no overhead, almost no daily effort. Just restocking, once every couple of weeks. Small, boring, steady checks landing every single month. She kept a simple notebook tracking each machine's sales. Some did better near gyms. Some did better near offices. She adjusted slowly, learning through small, boring experiments. Nothing about it required brilliance. Just attention and patience. Derek, meanwhile, tried something new that year. He started trading options, chasing bigger, faster returns. He lost $12,000 in 6 weeks. He told nobody. He felt too embarrassed. That's the cost people never mention out loud. Not just the money, the silence around losing it. He started a spreadsheet to track his losses privately. He deleted it a month later. He couldn't stand looking at it. Sarah never hid anything, because there was nothing shameful. Boring assets don't require confidence you don't have. They just require patience most people give up on. Let's talk about what these assets actually cost to start. Sarah's laundromat took $90,000, financed partly. She put down $18,000 of her own savings. The bank financed the rest, using the laundromat itself as collateral. Her storage units took a small business loan. Her vending machines cost under $1,000 each. None of it required being wealthy first. It required being willing to buy something unglamorous. Most people skip these assets for one simple reason. They don't feel impressive to talk about. Nobody posts a vending machine on social media, but nobody's vending machine crashed 60% either. There's no version of a vending machine going viral or going bankrupt overnight. It just sits there, quietly doing its one job. By 2025, Sarah's combined assets produced serious income. Laundromat, storage units, and vending machines running together. She barely managed any of it personally anymore. She hired one part-time worker to handle the rounds. Her role shrank down to occasional oversight. She spent her actual free time however she wanted. Weekends with her kids, trips she used to postpone. None of it depended on her constant attention anymore. The systems ran themselves, mostly, in the background of her life. Derek, meanwhile, finally stepped back from day trading. His account had recovered, slightly, after years of stress. He was roughly back to where he started. Years of effort for almost no net progress. That gap doesn't announce itself, it just quietly happens. He still remembers exactly how much he lost that year. He doesn't remember what he actually gained from trying. Let's talk about the boring assets most people overlook entirely. Car washes are one of the quietest cash generators around. People wash their cars whether the economy is up or down. Self-storage does the same thing during good times and bad. Divorces need storage. New jobs need storage. Downsizing needs storage. Chaos in someone's life often means money for the storage owner. Laundromats work because renters, students, and busy families always need one. None of these businesses need a single viral moment to succeed. They just need to exist in the right location, reliably. That's the entire strategy. Location, reliability, and time. Nothing about it requires predicting the next big trend. Nothing about it requires being early to some new technology. It just requires noticing what people already need, every single day. Sarah once said something simple that stuck with a lot of people. I don't invest in ideas. I invest in habits. People's habits don't change nearly as fast as their opinions. Opinions about stocks shift daily, sometimes hourly, based on headlines. Habits, like doing laundry or storing old furniture, barely shift at all. That stability is exactly what made her portfolio so boring. And that boredom is exactly what made it so resilient. Now let's arrive at today, 2026. Sarah owns a laundromat, a storage facility, and a vending route. Combined, they generate over $11,000 a month. That income arrives whether the stock market rises or falls, whether inflation spikes or interest rates change overnight. Her assets don't care about any of it. She's started looking at a second storage facility now, not out of urgency, just because the first one worked. Derek still checks his portfolio daily, out of habit. His net worth moves up and down with headlines. He still can't predict what next month will bring. He started reading books about market timing lately, hoping the next strategy will finally be the right one. Let's pause on that spreadsheet for one more second. Sarah keeps a simple monthly log of every single asset: laundromat revenue, storage occupancy, vending machine restocks. It takes her about 20 minutes, once a month, total. That's the entire time commitment for $11,000 in income. Derek spends more time than that checking prices in a single day. Time isn't the differentiator here. Direction is. One person's time was pointed at prediction, endlessly, daily. The other person's time was pointed at maintenance, briefly, monthly. Prediction never really finishes. There's always another chart to watch. Maintenance, on boring assets, eventually runs on its own. Here's the twist that stings the most. Derek isn't foolish. He's not bad with money. He just chose assets that depend on prediction. Sarah chose assets that depend on people's daily lives. One of those things is far easier to bet on. Let's talk about the number I promised you. Sarah's boring asset portfolio is now worth $1.4 million. Derek's stock portfolio sits around $210,000. Both started with similar savings back in 2020. The gap isn't about who was smarter. It's about who bought things nobody else wanted. There's a term for what Sarah actually built, if you want one. It's sometimes called a micro cash flow portfolio, a small collection of unrelated, boring income streams working together. If one machine breaks, the laundromat still runs fine. If one storage unit sits empty, the others still fill it in. No single point of failure, no single dramatic risk. Compare that to Derek, whose entire strategy rode on a handful of stocks. When those stocks fell, there was nothing else holding him up. Diversification isn't just a word for spreading out risk on paper. For Sarah, it meant spreading her income across things that couldn't all fail at once. Here's the part that should make you rethink everything. You don't need millions to start this path. Sarah's first laundromat cost less than most cars. Her vending machines cost less than a used phone. The barrier was never money. It was attention. Most people are trained to chase exciting investments. Nobody teaches you to notice the boring ones. The underground market of boring assets isn't hidden, exactly. It's just ignored by almost everyone, every single day. That laundromat you drove past this morning, that storage facility on the edge of your town, that row of vending machines in your office break room, someone owns it. It's paying them right now. It could just as easily have been you. Let's be fair to Derek for a moment, though. Not everyone who buys stocks ends up like Derek. Plenty of patient, long-term investors do just fine. The problem wasn't stocks themselves. It was the chasing, the constant switching, the panic, the need for speed. Sarah's advantage wasn't the asset type alone. It was the boring discipline behind how she used it. That discipline just happened to be easier to keep when the asset itself didn't move every single second. If you're feeling behind, like Derek once was, here's the only thing that actually matters. You don't need the next big trend. You need one boring, overlooked asset and patience. Small, steady, unglamorous income collected month after month. That's the entire loophole. There was never a secret, just boring cash flow hiding in plain sight. Sarah didn't get rich by predicting the market. She got rich by buying what nobody else wanted. Derek is still trying to predict it, even now. Prediction feels productive. It rarely pays like ownership does. So ask yourself the question this video started with. Are you chasing charts, quietly, every single day? Or are you ready to buy something boring? In 10 years, that answer decides everything. If you want the exact types of boring assets people like Sarah actually buy to start out, that's a video for another day. Subscribe now so you don't miss it. Because somewhere right now, someone is refreshing a stock app, hoping for a miracle that almost never comes. And someone else just bought a laundromat nobody wanted, not knowing yet that it's about to change their life.